There are 8 billion people in the world, and there are only 10 million people who understand that Bitcoin is a need.
Everybody is worried about Bitcoin's price in the short term. How low could Bitcoin go?
So 8 billion people need this. Only 10 million people understand that to be true.
But few understand the infrastructure being set up today.
10 years.
10 years.
And the minimum hold period for the Bitcoin is 4 years.
That has massive implications for Bitcoin in the long term. Click subscribe for one video per day, keeping you informed about crypto. Seriously, our stats show that 7 out of 10 watchers of this video are subscribed to Altcoin Daily. It's completely free, it costs you nothing. Give Altcoin Daily a chance, because this is seriously one of the biggest crypto traps I've ever seen. Now, I'm not a financial advisor, I cannot see the future, but I've been in crypto since 2017, so over 8 years, 9 years. I've survived multiple bull markets and multiple bear markets. And most people don't understand this. For the people who expect this to be the bottom and Bitcoin to only go up, grind up to new all-time highs from here, that's not what we normally see. I mean, just based on the data, the average bear market lasts 14 months and is typically followed by a 70-month bull market. But we have to get past the 12 to 14-month bear market first. If the bear market started in October of last year, when we topped off and started going lower, that would put 12 months around October of this year, and then 14 months towards the end of this year, which would be around where we bottom, and then we start the new bull market from there. If this time's not different, if this is typical, like we always see. But Austin, why can't this be the bottom? So much bullish fundamental news is happening. You don't get it. I do get it. I do get it. And again, I'm not a financial advisor. Make your own decisions. But this is what we face in the short term as we grind up or bounce up. The vast majority of buyers of Bitcoin in 2025 and also 2024 were businesses, funds/ETFs, and governments. That's different than Bitcoin's first 15 years of existence, where individuals bought. In this case, Bitcoin whales, OGs, finally took profits they sold to the ETFs and the businesses and the governments. Those are new buyers. Think about it from their point of view. How many of those new buyers wish they would have just taken profits when Bitcoin was 100K? I mean, obviously 125K, but just 100K. And then how many of those people wish, damn, they should have taken profits when Bitcoin was at 95, 96K? As we start to grind upwards, a lot of those new buyers, again, this is the first time, the first few years they've gotten into Bitcoin, they'll settle for if Bitcoin hits 80 again. They'll settle if Bitcoin can bounce back in the 90s. They would love to even, maybe not all of it, but sell half. Sell 40% if Bitcoin can just hit 100K again. That's the resistance we face, and that's what we have to work through for the next 6 to 8 months or the rest of this year.
What would that do? That's 7 times the market cap of Bitcoin today.
And that brings us to the trap of investors thinking that Bitcoin's done. Bitcoin is dead. Bitcoin to zero searches are going parabolic. People questioning, will Bitcoin be here in 5, 10 years has never been higher. So the trap is thinking that markets aren't cyclical, and whether this bear market only lasts 6 months, or maybe let's double this, make it 28 months, I don't know, I cannot see the future. But if you have a product that is continuing to mature, continuing to be adopted, continuing to literally be put into the traditional financial products of today, this is wild. Bitcoin as a loan collateral can lower risk and volatility for pension plans. New Market Capital CEO Andrew Hohns explains on CNBC, this was many months ago, but it's happening now, how Bitcoin-backed loans reduce their risk if you hold for the long term.
So there's a property.
Yep.
Physical property.
Multifamily.
Right? It's a
Multifamily. 63 units.
It's a multifamily property. The sponsor, effectively the owner of that property, needs a loan.
That's right.
Okay. They come to you.
That's right.
Okay. You say, we'll provide you the loan in the form of
a loan.
A classic loan.
That's right.
Okay. So you're going to give them cash.
That's right. Term financing.
Term financing. And how long's the loan? Just
10 years.
10-year loan. Okay.
That's right.
At above market rate or below, or what's
no
the
market rate interest rate?
I'm just trying to slow the whole thing. Okay, now let's introduce the Bitcoin piece into it.
That's right.
So no, explain how the Bitcoin piece
and
then relates. So the loan has been provided.
The use of proceeds is to pay off the existing financing. So
the use of the proceeds
of the loan is to retire the existing mortgage.
Right. So there's an old mortgage.
Gone.
They're going to pay the old mortgage off.
That's been paid off.
Okay.
Now they have a little bit extra money to make some improvements in the property.
Right. So a little bit extra cash. So the amount of money you've lent pays off the old loan.
That's right.
It's also you have a little bit of extra to fix
Improve
stuff up.
the property, fix stuff up.
Yep.
And then with the remainder, which is a little bit
so you
more.
have even a little extra, an extra
right.
turn.
And that, instead of cash out, it's Bitcoin in. And we use it to purchase some Bitcoin and add it to the collateral package of the loan. So now our loan is supported by both the traditional asset, the 63-unit apartment building, and the Bitcoin.
Okay. So the loan, it was maybe $2 million more, so that's how you get the Bitcoin out?
Exactly right. So it's
on the assumption that the Bitcoin's going to rise faster, and that will become an asset.
Over the life of the loan, for sure. So we think on the downside, this provides us with much better protection compared to a traditional lender, because a traditional lender, if something goes wrong, they have to recover against that particular building, which is idiosyncratic risk. Something might happen with the maintenance or what have you.
But that also requires conviction on your end that Bitcoin is not a volatile asset over time, and that is either going to go up or at least stay where it is.
Well, that's by fusing the Bitcoin with credit and by fusing it with traditionally financeable assets, it gives us the luxury of expressing that medium-term view on Bitcoin, and that's what's key. It's volatile in the short run. You know, I mean, minute by minute today, who knows? It could cross 100,000. That would be exciting.
How long's the loan?
10 years.
10 years.
And the minimum hold period for the Bitcoin is 4 years. So what we say to the borrower is we say, look, you can repay the loan at any time for any reason with no penalty, which is a really valuable feature compared to a traditional loan.
Yeah, that's like a home mortgage.
Like a home mortgage almost. That's very unusual for commercial financing. But what we do say is that to the extent that the loan is repaid at year 4 or earlier, the minimum will release the property. But the minimum length of time that the Bitcoin has to stay in escrow is 4 years.
Andrew, smart money understands that when you put Bitcoin into a financial product where investors are used to holding that financial product for at least 10 years, but minimum 4 years, Bitcoin reduces risk. Average individuals are freaking out, but smart money understands we have only just begun. Here's Peter Dunsworth on the Bitcoin Well podcast, explaining how it's inevitable that the price of Bitcoin will go exponential, how Bitcoin is being worked into traditional products like bonds to create a smarter bond, because even just adding 5% Bitcoin into a traditional financial product allows the bond to preserve purchasing power even at a low nominal yield. Let's watch this, then react.
I think it's inevitable that every company will start stacking Bitcoin. I think we're going to see Bitcoin-backed bonds, which is going to recapitalize the entire financial world. Then I also think we're going to have payments in Bitcoin spread to the commodities market, the oil and gas market. You look at, there's 100 million barrels of oil a day that get traded. You've got the imposition of tariffs across a whole host of countries that are rich oil producers. Russia produces 10% of the global oil, and they're on a whole list of tariffs enforced by the US. If they want to take payment for their oil globally, there's only one system on earth that the US can't control, and that's Bitcoin. And I look at that and think, there's somewhere between $500 to $1 billion per day of global demand in just that one use case. And then you look at the bond market. If we're looking at creating, principal protected notes, which are going to recapitalize our banking system and our financial markets, there's roughly $60 to $70 trillion worth of bonds that are refinanced on a global basis. If you paired that with, say, a 20% weighting to Bitcoin, that would be a bid of roughly $14 trillion a year on Bitcoin. And I look at that and think, well, there's $14 trillion that the government can print out of thin air to stuff into Bitcoin. What would that do? That's 7 times the market cap of Bitcoin today. what does that do when that 7 times the market cap is trying to get 2 million Bitcoin that's left on exchange? Obviously, that's going to send that exponential. But what you've got, fuel on the fire for this is the fact that there's credit markets that are being built out at the same time. Bitcoin, whether it's commonly known amongst traditional financial markets, will be seen as pristine collateral because that can take as much capital as possible. That allows Wall Street to speculate. There's no downstream consequence to Main Street. And all of a sudden, that's the vehicle that everyone wants to basically trade. All of a sudden, there's none of it available. So this is where we see that inflection in the S-curve.
Yeah.
And I look at this and think, this is just inevitable. And to pile on one other considerable factor, which we're nowhere near yet, is that Bitcoin is a need for 8 billion people, but maybe only 10 million people feel like that at the moment.
Michael Saylor says the following U.S. banks are issuing credit against Bitcoin, whether it's Wells Fargo, Charles Schwab, JP Morgan, Citi, BNY Mellon, Bank of America. And what is possibly the biggest misconception about Bitcoin that I've ever seen, is people thinking this has to skyrocket the price today, because the dirty secret is most big money institutions are just watching. They need to see the early adopters, companies like this, prove themselves over 3 years, over 5 years, over 7 years, until they feel comfortable getting in, and then the big money continues to flow.
What would this look like for the government, for the United States of America? We would dramatically reduce 10-year interest rates. We've already discussed that. Significant savings, $554 billion present value savings. Dramatically reduce the interest rates from 4.5% to 1%. That can ripple through the rest of the Treasury market and reduce mortgage borrowing, reduce auto borrowing, reduce small business lending costs, so many different advantages. Also, substantially reduce the interest expense for the government. That's where the present value component comes in. Revenue neutral acquisition of an enormous amount of Bitcoin. And if you take a look at the CAGRs, and we have a symbolic one in there that I want to draw your attention to, but if you take a look at the 25th percentile compound annual growth rate, 37% per year, which, by the way, is exactly equal to Michael's bull case for Bitcoin in the year 2045 on a CAGR basis. That produces a government upside in this structure, and I did not plan it this way, it just turned out this way. That produces a government upside in the structure of 1776, 1.776 trillion US dollars. That's after 10 years. As you extend this out to 20 years, in the year 2045, the compound annual growth rate of the 25th percentile, 36.62%, produces a government entitlement of Bitcoin that is slightly greater than $50.8 trillion, which is the expected size of the funded federal debt in the year 2045. In other words, with this plan, we're in a position to defease the federal debt.
Again, our stats show that 7 out of 10 watchers of today's video will subscribe. If you're part of that 3 in 7, if you got value today, please consider subscribing now. This is just the beginning. This is an ongoing story. The minute I get more information, I will make a video. I will keep you updated. Like always, see you tomorrow.